Hi, everyone. This is DeFi Dad. You are watching Yield TV, episode 10. You didn't expect that, Scott. I didn't give you the warning.
No, yeah. That's awesome.
Right? Blast it out from that? Yeah. I feel like every episode starts with the guest's reaction to having their ears blown out. And then they're like, what just happened? Am I on a real TV show? And I'm like, no, there's no one watching us. It's not real TV.
We're gonna have to redecorate your background to be more cyberpunk.
Exactly.
With the intro.
Yeah. Well, we're renting a home on the East Coast. We moved across the country, and it's been nice because we moved right before the forest fires, but we definitely moved into an antiquated, decorated home. So,
classic.
Yeah. Pink walls. I've got old lights on the walls that do not work. It
sounds like my house, but for a whole different set of reasons why the lights don't work.
Yeah.
Just need to change them.
Hey, everyone. So this is Scott Lewis. Scott is the founder of Concourse Open, which you can talk more about that, Scott. But in a nutshell, Concourse Open has multiple DeFi products. So I think the most notable of the three that I have here, which this is just three of the many, is DeFi Pulse. DeFi Pulse, everyone knows it's really been at the forefront of like DeFi growth because folks like to track total value locked for applications. We've also got the ETH gas station. So I use that every time I'm about to do a transaction. I check it for the recommended gas price. And then lastly, DEX.AG, which is really, I'm trying to remember, Scott, like, were you the first DEX aggregator? You were one of the first few, but really,
I would say, yeah. So Total, they used an aggregation of DEX prices to rebalance your portfolio. So like they definitely were the first to like incorporate different DEXs into like one user flow, but it struck me more as like a product for portfolio management than a DEX aggregator. But yeah, maybe I think it depends how you define what a DEX aggregator is exactly.
There's no accountability. You can just say whatever. But yeah, Scott, thanks for joining me. How's it going? How's life? And you're in Tennessee, right?
Yeah, I'm in Nashville.
Very cool.
Yeah, no, it's I like it. I grew up here. Wish Tennessee in general was taking coronavirus a little more seriously than they are. But it is what it is.
I got a funny story for you. We were supposed to go from our state up to Vermont, and a friend of my wife was like pretty worried about us coming to visit, which is fine. Like we've taken all sorts of precautions and kind of just been isolating, seeing friends with masks, things like that. But it was just funny because she like reached out in that sort of like roundabout texting way and was like, hey, boo, just noticed your county spiked. They're in a different state. So I was laughing. I was like, oh, I didn't know that. And we're in a state that's pretty safe, I'd say. Like we're doing pretty well. We're in Massachusetts, and it's the numbers are pretty down. But I just laughed at this like, oh, hey, I noticed your county spike. And then she said, how are you guys doing? And we're like, what are you talking about?
We have mild fevers, but we're pretty sure it's no big deal.
Yeah. Before we get started with the interview, I did want to just touch upon the fact that Rocket Pool's testnet launched today. We were kind of talking about that yesterday, so you can check that out at rocketpool.net. Rocket Pool, gosh, I'm trying to think of the best way to describe it. It's a way for someone to participate in staking Ether when Ethereum moves to proof of stake, but without having to run a validator or a node. And that is great because that actually takes quite a bit of work and expertise. As simple as it can be, it creates friction. So Rocket Pool makes it easy where you can just deposit ETH and you can come and go as you please. And anyways, I've been following the project. I think it's really cool. I have no exposure to whatever token it is that they have, but I do know that in the future, you would deposit Ether and you would get back our ETH. It's kind of like the IOU token, like when you get CDI or CUSDC from Compound. The other thing that we'll talk about more tomorrow is Shell Protocol launched, which is, I'm going to go ahead and just quickly share my screen. So Shell Protocol is a new stablecoin liquidity protocol. And let's see if this is it. Here we go. So Shell Protocol lets you deposit Tether, DAI, USDC, and synthetic USD. And again, very similar to Curve, MStable, if you've ever checked them out, with some tweaks to how they provide that liquidity and how they aim to stabilize the peg to the US dollar. But anyways, we'll talk more about that tomorrow. They do have 7.5 million in total value locked that's been deposited, and they don't have a governance token. So I thought that was really good in the first 24 hours that there's people participating without having some highly inflated governance token. All right. Other than that, we could just get started interviewing here. Scott, I wanted to learn more about, I'm trying to think, like, it was a few months back that I interviewed you, and that was a long time ago. I think we were like barely at 2 billion in total value locked. Can you talk to me about what has it been like to watch this metric TVL that you guys created take off? Like, how do you view TVL, and maybe even you should probably define it to get started, just because some folks might not know what it is.
Yeah, well, that's been part of the roller coaster, because kind of like when DeFi Pulse introduced TVL, it's like just the assets that are like locked in the smart contracts that are like doing work like as capital.
Right.
And it was like DeFi Pulse, like for TVL was a very like user-centric metric. It's not something that was created for sort of like VCs to evaluate projects or like value governance tokens. It was just something for like, so users could know what other users were trusting with their money.
Right.
And at that point in time, sort of like the DeFi token craze was not really what it is today. And so that made a lot of sense. And like one of the biggest roller coasters has been like the community sort of like using TVL everywhere.
Yes.
And so now there's sort of like there's sort of like, when we talk about TVL, it's just the assets actually in the protocols. But now with kind of yield farming, there's sort of like, okay, if they're going to give some of these yield farming tokens to compound token holders, you just kind of put you stake your compound in like a synthetic minter contract or wherever, and then you receive the tokens kind of as like a roll call distribution.
Yeah.
To bootstrap the open org. And those tokens aren't really doing anything. Like they're not providing liquidity. They're not like active in any protocol.
Right.
But because that staking does seem a bit like locking, kind of like some of the yield farmers have sort of like looked at that and started talking about that as TVL, which is kind of interesting, and I understand where they're coming from, but it's not really doing anything for the users of the protocol. And so, and it's also sort of like you're not trusting a new protocol with your money. You're just trusting a fork of like an existing contract for the roll call. Yeah. And so we're kind of sticking to like our idea of a user-centric idea of what TVL is. But, you know, everyone kind of like, everyone is kind of like using
Everyone
the
uses
word
it.
how they want to, and it's sort of like it's not our thing anymore. Exactly.
I think that's cool though. Like, and I don't think there's anything wrong with it. Like I've, I think we've kind of gotten past it, but for a while I would see some, getting all hung up on, the double counting, which I wanted to ask you about. Like, you guys have a lot of, you've taken a lot of measures to try to really show like what is the most accurate, comparable total value locked. But anyways, long story short, like, people are complaining, and it's like there was no standard before. And I like the idea of being able to see on chain how much money has been deposited into these applications, because at the end of the day, it's not like this is a measure of how much people are trusting those smart contracts. If you leave money on an exchange, I think we all, especially those of us in DeFi who self-custody, like, we feel that's a bad idea. You take a lot of risk. But in a different but similar sense, when you deposit money into a DeFi app, you are trusting the smart contracts, because of one thing. Our concern is a smart contract bug. And so when folks are leaving that value in there, it is a measure of activity or adoption or some sort of utility that folks are finding. But I think your point is, don't just look at TVL and say, oh, that's great, I can put my life savings into it.
Yeah, definitely. And like, it's like when people sort of using TVL to do like 15 different things, like, maybe you can do that a bit, but like any like very niche like type of analysis, there might also be something else that's like more specific to that thing you're looking for.
Yeah.
But there's a second problem that, like, one of the reasons why TVL I think has sort of been used a bit more is because it's like expensive to fake. If you want to get near the top of the leaderboard, you have to find some way to get $1 billion of stuff into your protocol.
Yeah.
And there's not that many like DeFi seed investors that have $1 billion in the sideline they can just like toss in for fun. And if they do, they're going to lose it all if that protocol gets frozen. So having kind of TVL be a like hard to fake metric is sort of like an anchor point for other metrics people look at, I think is good for the space. Because like, let's say at a very low fee, like high performance, not that decentralized smart contract platform, it would be very easy to spend a week trading with myself and paying very little fees for gas, and generating large daily volumes for like a new DEX. And it might be easy to show people that, hey, look, everyone's using my protocol. When in reality, people aren't really using that protocol. You're just making it really easy to create some metrics that are cheap to fake, even if you haven't been able to really attract the capital.
And this is what's happened with centralized exchanges in the past. I think like I want to say that Masari was one of the early ones that was trying to like report on more accurate values and like really trying to call it out. I feel like that was the value prop that they started off with. And, it's interesting now. I mean, I have no idea what wash trading goes on in centralized exchanges, but if you even move beyond total value locked, which, like you said, is more challenging to fake, it really costs a lot more money to do. Uniswap, 24-hour trading volume has been surpassing or eclipsing Coinbase the last few days. So it's a pretty big deal, like, to watch these, to think about when Uniswap was 10 million 4-hour trading volume, and we were all like, whoa, this is crazy. Like, how cool is this? They're doing 10 million. I never dreamed that it would grow this quickly. And frankly, I think like we're at like an inflection point. Like, this is early days for DEX trading volumes. Like in a year now, I think you're gonna have probably 5 to 10 dexes that are doing more trading volume than
and like I think in Uniswap's case, like in particular, kind of the way it's so transparent. Like if Uniswap has $100 million of trading volume, let's say it's in like the ETH pool, $300,000 is going to like the LPs of that pool. And since that LP group is like anyone on Ethereum that has ETH or USDC, like if someone were to want to pump the trading volume of Uniswap to make a fancy metric, they would be spending a lot of money. Right.
That's right.
And so if you're looking at metrics, kind of like the more transparent it is, and like the more you can be sure that people are not wash trading, the more you can like trust that as being like organic, authentic activity. And I think when you're trying to like analyze how much adoption different protocols have, like really drilling down and seeing whether you're being kind of like sold a bill of goods is like incredibly important.
Yeah. It's we've come a long way. There's just been a lot of improvement on the narrative a few years ago, where there was all this promise of what we weren't calling it DeFi then, but just what would Ethereum potentially deliver, and now we're at a point where, in order to stand out, even in the Ethereum applications list, you're looking at needing 500 million or more. I mean, there's teams that are doing amazing work that are well under that marker, but DeFi Pulse, when you look at the list, I mean, Jesus, like the top 10, I think are nearly all over 500 million. Let me just double check. Oh yeah, actually it is. Let me go back to USD. If we're looking at top 10, 298 million US dollars is where Ren VM is, and that's at the bottom of the top 10 list there.
And I think just any time you're looking at the TVL list, like it is trying to like turn everything into an Apple, right? But like different sorts of protocols, like TVL may be better or worse at like getting at like the core question you're trying to find an answer from. And so one thing that I think you can say is that if like the protocol you're looking at is kind of very similar to another like leader in the space, if that protocol only has like a millionth of the TVL as like a similar protocol, then you're probably dealing with a protocol that doesn't have as much adoption. Right. And so if you see sort of like a very inflated, like fully diluted value or circulating supply value for the token, that can be sort of like one data point that like, hey, maybe kind of the promotional marketing that I've been reading is not like as authentic as it could be.
Could you talk about that point you were just making, that when you look at applications based on TVL, it's like trying to turn them all into apples, and they're not all apples. Can you talk about those nuances? I think the one that comes to mind for me has been Kyber. I feel like Kyber doesn't stand out on that list the way it probably should, like just because Kyber is not to compare Kyber and Compound, I think is a bit unfair. So how do you think about those apples and oranges in the list?
Yeah, definitely like if you're comparing I think when you look at Uniswap sort of like at the top of the list at 2 billion, what Uniswap's at a very fundamental level, what Uniswap is asking users to do is deposit their digital assets. And if there's a bug in Unismart's smart contract that like freezes withdrawals, it's very possible that Ethereum will not fork to fix that. Maybe it will, maybe it won't. For the parity multi-sig bug, Ethereum did not fork to fix it. And I would, if Uniswap withdrawals were removed or were frozen, I would be very scared that the money I have in Uniswap would not be coming back to me.
Yeah.
And so like it's if you're thinking about making a decision about whether to put your money into a smart contract and you're thinking about the risk of not getting your money back, for Uniswap, you know that over $2 billion has looked at that. And maybe everyone, not everyone that's deposited in Uniswap has evaluated what that smart contract risk is. But I really hope that kind of the people that have 5, 10, 20 million or more of their own money or their organization's money in Uniswap have kind of like looked at that risk with like a very good magnifying glass and decided that like sort of the benefits of participating in that protocol were outweighed the risk that they would not get their money back.
Yeah, it's one of those things where everyone wants decentralization. They want censorship resistance until their money won't come back to them. Then they want like an adult to step in, and it's something that I know in a lot of the DeFi tutorials I do. I mean, I basically call out the same risks at the end of each one, but in many cases, I have to think like I'm willing to lose whatever money goes into this. There are applications like Uniswap. There's no doubt like those are more battle tested. They've got audits to prove it. They've got users to prove it. But never say never, and anything could happen, and it would definitely hurt us to see.
Like I would say if you think about TVO as like a way to figure out like which projects have like the most talented engineers or like the like anything else besides are users locking money into this protocol or not, like you're probably going to miss a lot. Like there's lots of projects with like some of the best builders in the space that don't have a DeFi protocol where users locking money in it is a central aspect of their protocol. Right. And so it's like Rocket Pool off the top of the show. Like, they've been waiting on proof of stake and they've been trying to build like a secure system. Like the fact that they're not on DeFi Pulse does not have anything to do with like the quality of the project,
Yeah. And, great point. Yeah. There's a lot of quality teams that aren't even on it because it's just not the timing hasn't come yet, or even like some of them too. Like they're just a bit ahead of the times. Like I think Loopring is one of. By the way, I have no exposure to LRC. I've been trying to call this out, like as I compliment these teams and make clear it's like no. I follow these projects. I don't have to hold a bag of their token to be interested in it. Loopring is a fascinating team to watch. And they only have like 15 million, I guess, in total value locked right now. But I would argue it's, to me, the decentralized exchange that feels the best of all of them. From a retail standpoint, I'm not on DYDX, doing like huge trading volume. So
yeah, like if you're trying to figure out like where to trade, I'd probably look a lot at like where the best price on the trade is. Like that's probably more important than like how much money people are locking into the protocol. There are like some dangers with like doing a single transaction with like an unaudited smart contract, but I think there are a lot more dangers when you're depositing your money into like an unaudited smart contract. I mean, probably don't do either unless you're pretty deep in the space, but like the safety is more important, if you're putting your money into something for an extended period of time.
You know what, Scott, as we were talking about finding that best trade, maybe this is a good time to bring up DEX.AG a moment. Any chance you would want to just share your screen, but just simply show, I was curious to show the order book. Like you've talked me through this before. You can kind of see the depth of the order book and look across all these different exchanges. Would you be comfortable sharing your screen? I don't want to put you on the spot. I could do it. Also, I
have like a lot of screens.
Yeah.
Like we definitely been focused on like kind of improving the the sort of the simpler swap interface,
Mm-hmm.
and just kind of continuing to like integrate more and more DEXs.
Yeah, we've got I've got the ability here to buy and sell of all these different liquidity pools or decentralized exchanges or protocols. And then I would just choose what I'm buying here with what coin. So what am I selling? And then I can find those trades. So let's say I'm gonna buy 1 Ether with USDC. I can go and find that trade and see what is the trade available. And it looks like it's 66% being sourced from Kyber, 34% from Balancer. So I forget about that. You guys split trades across different sources. It's not like it just comes from a single place.
Yeah. So it splits the trades, which is nice. And another nice thing is that like, there's no fees on that interface. And if the trade price improves between when you send your order and like, let's say like you send an order to buy at USDC from Uniswap, if someone else sells before your order gets to Uniswap, you'll get the better price. And I think for most people, it feels like all like apps should do that.
Yeah.
But in the DEX aggregator space, unfortunately, that's not always true. And so like, I think in like fast moving markets, if you go to buy something and the price goes down a lot, you probably want that cheaper price. And so I don't know, DEX.AG will give you kind of that better price while also going between different DEXs and comparing between different DEXs.
Maybe Scott, what we should cover next is the DeFi Pulse Index set. That's a newer product. That's a collaboration between you guys and Token Sets. So I can share my screen and we can just kind of talk through that. But it's an index, right, of the DeFi market. The idea is like hold a basket of tokens, right?
Yeah. So DeFi Pulse is just is creating the index, and then like Set Protocol right now is kind of managing that set, and kind of maintaining the rebalances. Like when the index needs to change, it's an index that's kind of like uses DeFi Pulse a bit to kind of filter the DeFi projects in the index have to be on DeFi Pulse. And so kind of that lets us focus on tokens that kind of have decent user adoption while still being able to be kind of a passively a passive index.
Yeah. Because in order for someone to gain exposure to this index, which by the way, folks can go to tokensets.com. If you click on Explore Sets, it'll show you these are newer sets. So they used to just have social trading sets, which is like copy trader. So someone who's got a strategy, whatever it is, whether it's them looking at charts or whether it's like an algorithm, they're trading and then you're copying that trade by holding the set. Robo sets are more simple strategies like a moving average crossover. And then this is new. These are the three here. And if we click on DeFi Pulse Index Set, I've got these tokens weighted. So like 16.5% Len, about 15% Yearn. Anyways, these are all the tokens here. And to get this, I just buy, however much I'm going to get here, like 1 Ether of it. And that's it. Oh, who is that? Goodbye. There you go. Anyway, Scott, anything to add to this? Like, I guess what I'm curious is like, how does rebalancing work with this? Because normally with a robo set, there's a criteria for rebalancing. Like if Ether crosses above or below the 20-day moving average, it's,
Yeah. So the DeFi Pulse Index, it's a bit sort of like the traditional finance kind of corollary might be kind of like S&P 500 or the Russell 2000.
Yep.
In that it's kind of weighted by the market cap, specifically the circulating supply.
Mm-hmm.
And so kind of what that means and why it's important is that the index is kind of tracking the percent, like the value of the circulating supplies. And so if you had, let's say I have a Uniswap pool and it was like 2 DeFi tokens, I'm always going to be 50-50, one DeFi token and 50% the other DeFi token. So that's problematic because of impermanent loss.
Yeah.
And so since we are probably kind of early and in DeFi's development, and many of these tokens, some of these projects may not end up being successful, and hopefully, fingers crossed, more than 0 of them are incredibly successful. If you have one token, let's say one token is worth $1 and another token is worth $1, and one of those tokens kind of takes a slow route to 0, and the other token goes up by a lot, you're going to basically keep, so to maintain your 50-50 exposure, you're going to keep selling the token that goes up to buy the token that goes down. And when we're dealing with like a large group of projects where we're expecting at least more than 0 to fail, because it would just kind of be, I think it'd be unlikely if they just all succeeded beyond their wildest dreams, even though I hope they do. You'd run into a problem where kind of the impermanent loss from like large steady declines kind of will hurt your long-term returns. And it kind of gives you a diversification in a way that saddles you with potentially a lot of impermanent loss. And so to avoid that, the percentage exposure to the things in the index kind of change as the prices change.
Right.
So let's just say hypothetically we pick like one token in DeFi Pulse Index, like ETHLend. Let's say it went up 100x, while every other token in the DeFi index went to 0. Kind of the index would, in that ridiculous hypothetical situation, kind of the index would not be selling any of the Aave tokens as they went up, or the ETHLend, which turning into Aave tokens as they went up, and so you could still do well in a situation like that.
I think what's logical is the way that the DeFi Pulse Index is set up, or any sort of like legacy index that we've all used. Oops, sorry. Let me go back and show that screen again. But when you talk about impermanent loss and you talk about Balance or Uniswap, any of these automated market makers, many people first struggle just to understand what that is, even though there's so much value for them to gain from making use of these like really like popular products. So, for example, if you're going to start providing liquidity, which like we even on Zapper, we make it really, really easy to zap in and provide liquidity. But the truth is there's a lot of risk that comes with that. And I think it's important that folks understand that they understand it ahead of time versus getting wrecked by it. There's a lot.
So I could just do like my best kind of like super basic what impermanent loss is and what risk you're taking. So let's just assume for a second that the trading fees for the pool were 0. You probably like those don't exist, but let's pretend there was a special fork of Uniswap that had 0 trading fees. Mm-hmm. The more one token appreciated relative to the other, the worse you would do. So if one token goes up a lot and the other token doesn't move, the whole time it's going up, you're going to be selling a little. And since that token's now worth a lot more, you kind of wish you hadn't. and you when you were selling it, you bought this other token that didn't go up. So that would kind of be like it's impermanent loss relative to just holding both of those tokens and experiencing all the gains from the one that went up and the unchangedness of the one that went down. On the other side of the scenario, let's say we have one that doesn't change and one that like goes down, 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 down. You're constantly buying the one going down to sell the one that's not changing. So if you're not collecting any trading fees, you would sort of just lose any time they moved relative to not participating in the pool. So that leaves kind of the question, why does anyone actually put their money in Uniswap? And there's like pretty good reasons to do that. I mean, I have some of my money in Uniswap as an LP. You get trading fees. So you're not actually doing the one, when I say you're buying as it's going down or selling when it's going up, I really mean that other people are buying from you or selling to you as it goes down. And so since Uniswap charges 0.3% trading fee, you get that fee. So kind of the ideal situation in Uniswap is like someone buys from you, sells from you, buys from you, sells from you, and you keep making that LP fee over and over and over again.
Yeah.
And so essentially kind of making this decision about whether to put money into Uniswap, it's how much trading fees am I going to get versus how much do I expect to lose on a permanent loss. And you really want to jump. And also, by the way, smart contract risk. You could lose all your money if you can't get your tokens back out. But, but just ignoring the security risk for a moment and focus on the more like financial gains and losses of the trading, it's sort of like, are those trading fees keeping up with like the impermanent loss I'm getting? And so as trading volume goes up, that's good for you. And sort of like the trading volume times the fee rate. As volatility goes up, that's bad for you. And so you want to like find situations where the trading fees are good relative to the volatility.
You know, that's a good point, Scott. Like if you go to on the Zapper Invest dashboard, we actually we changed some of the numbers that we're sharing there now. So like, for example, if I go to here we go. If folks go exploring the opportunities across Uniswap, Yearn, Balancer, and Curve, and we are going to be adding more of these. It's now ranked by 24-hour volume, liquidity. Liquidity is important because if there's less than, let's say, a few million in there, I mean, based on what you just shared, you could experience some pretty severe and permanent loss. But then the fees is what we all care about. You know, you want to know, what are the 24-hour fees? Are they like, we want more of that because that's indicative. This actually goes hand in hand with volume. So if you are tracking volume, you're essentially tracking fees because everything in Uniswap is 0.3%. But
yeah, so on something like this, I would be looking over here to compare the like fee 24 hours or maybe fees over like a little longer time horizon, because 24 hours can have a lot of volume or a little volume. And then comparing that to the liquidity, because that those fees are split amongst everyone that's providing liquidity.
Yeah,
and then
they're like checkpoints. You go. I always think, do I want exposure to these tokens? That's the first question. If the answer is no, like I shouldn't even be looking at it. And then second is, how liquid is it? Because if it's not liquid, I'm just going to screw myself and get wrecked by impermanent loss. And then the next thing is, what is that volume in those fees? Because Balancer has customizable fees, and so it's not 0.3%. And that's why we all love Balancer, because it's just you know, it's a little bit more updated in terms of that model. But at the end of the day, Uniswap now offers all these rewards in those 4 different pools.
I might have one small tweak to that approach.
Yeah.
I definitely would say, don't, make sure you want to own the thing, because impermanent loss is only relative to how the assets perform anyway. But the one thing is, I would say kind of like liquidity in the Uniswap pool is a bit your enemy. because you would really want to find ones where the volume being high relative to the liquidity already there, because then you're getting a bigger share of the trading fees. But sort of like there's the other factor of like, how volatile is this? Like something like that are, I'm not sure the Ethereum, like, you know, the bigger assets have lower volatility than the more immature assets. So like if you're thinking about ETH/USDC, probably that cross will have lower volatility on average than if I'm just looking at a little bit down this list. We see Pickle ETH. Pickle ETH probably has more volatility, like expected volatility over the any given future time frame, even though any particular day it may be less volatile. And so sort of like if you, let's say you had Pickle, ETH, and USDC, and you're going to pick, which two of these three should I be providing liquidity in? I would want to really make sure I'm getting a bit more yield for my Pickle ETH liquidity, whether that's through a yield farming mixed with fees, or I don't exactly keep up with the latest going on the Pickle project, but
you know, if anything, Scott, like the key takeaway is a lot of what you're sharing, some of the ideas I'm trying to get across, it helps someone to understand there's actually a lot that goes into the strategy of providing liquidity. And I will say for myself, I'm no pro at it. At the end of the day, you know, I've found myself saying, so all I have to do is know where the price is going, and I could definitely do very well here, because if I know the price is, which is, you know, not possible, but if I am holding something that I want to unwind out of and get more ether, hey, it could be great for me to get into a pool where, I'm not saying anything about the Pickle token, but let's pretend I hold a bunch of Pickle and I actually want to get out of that position. It could be advantageous if I believe that the price is going up. As the price is going up, if I'm providing liquidity, I'm actually selling Pickle into more ether. However, if the price collapses, I'm now accumulating Pickle because everyone in Uniswap is buying or is selling their Pickle to the pool, and I'm essentially buying it. So
yeah, I've heard kind of this theory of using Uniswap to kind of lower position risk.
But you still got to know where the price is going.
Generally, I would say I have not been a devotee of that style of thinking, because if I don't want exposure to something, it's because I think the price will go down, not up. That's if the price goes down, you end up owning a lot more Pickles than you did before.
Maybe it should be the reverse then. It should, you know, an idea could be that, hey, I'm trying to take profits on this, even though like that, then it makes a lot more sense. But again, like I mean, man, if I reported daily on what I think the market's going to do, and if you just counter traded me, you would be a very rich person right now. Like I have no read on whether price is going up or down ever. I did know that price was going up the last few months, though. I was able to hop on that train.
I would maybe extend that to maybe some of the viewers. Generally, like the people that are most passionate about Ethereum, they're passionate about it because of how they think it might change the world.
Yeah.
And while some of them like are traders, like generally don't think just because someone is passionate about Ethereum, they're also a professional trader. In general, that's a pretty bad assumption. And like you see people talking about things that like excite them and interest them. That's not like also investment advice, right? Like, and I think just in general, like you see like, you know, like just like, you know, it's really important that people kind of like take their own approach and sort of doing their own research, and like just buying and selling based on FOMO from tweets like is probably the worst thing you can do.
Such a bad idea. Most of the time people are talking about something because they own it and they want it to go up. And it's if you don't see any sort of disclosure somewhere, like if you can't know whether they own it, first off, if they do own it, that's why they're talking about it. You know, there's nothing evil about it. Just what people do. It's their nature. They own it because it's valuable and they want others to learn about it. But yeah, I think like right now, like that's something going back to, I've only been in the space since 2017, and I don't remember actually buying anything based off of a tweet, but it influences you for sure. Like I remember thinking like, oh, I should pay attention to this because this person that I respect and is providing analysis is talking about it. I can tell you most of the people I listened to in 2017 were full of shit in the end. And they all, I was told that the Bitcoin price and Ether and everything else was just, just recovering, and it was going to keep going up, and, it was going to be 50 to 100,000. I mean, hey, I've never seen any of them apologize for their views. They were incredibly wrong. So sticking to the utility of what's being built in this space. And I mean, I think really digging into like, how does this serve a greater purpose of improving a new financial system that's peer-to-peer? I think that can take you much farther than speculating on price.
Yeah, I think it's a lot like if you're trying to make a quick buck, like listening to people on Twitter and buying those symbols, you're not going to make a quick buck, I promise. Or maybe, I mean, it's a lot of random chance involved. But
you could. I mean, there's no doubt. Like I think showing up every day, staying committed, continually learning actually can serve you very well in any industry. But in this industry, with how fast everyone is building new products, I think DeFi is I mean, it's been a nice surprise this year that there's been sort of a comeback of some fundamentals. I know that there's criticism of, like, I have huge criticisms of the food fi stuff that happened over the last few months, but I continue to see lots of quality teams building quality products, and you got to try to like block out the noise.
Everything is so easy to use in DeFi that like if you haven't used the thing and used the other things like it, like why? That's like a bare minimum for like owning a thing, right? Like there's no excuse. Like if you've never used a DeFi lending protocol, you probably should not be owning DeFi lending protocol token, like making speculative plays on DeFi lending protocol tokens. And it's like it's like so easy to use these things, even if it's not like with serious money, right? Like it's so easy to use them as like a test user, like with test money, that like I think like just getting your hands dirty, you're gonna have like a lot more information richness of like the signal in your information than like just like going based on like someone else's like top of mind hot take on Twitter.
What Scott, excluding the products that you guys build, what other DeFi products do you admire most? Like which ones? It could be what you admire most, or which ones that you use most frequently.
Let me see. This is most a lot on the list here.
Yeah.
Uniswaps, definitely like just something that's part of my very much doing this every day type of flow. Had good experiences with like Maker, Aave, and Compound when I use those. Curve has saved me a ton of money, like getting stable coins I need.
One of the biggest innovations was having a very liquid stable coin pool like Curve. They've taken a lot of knocks and bruises too, and like I recognize they've probably done some things. They could have done things a better way in some instances, but come on, I mean, a year ago it was a nightmare to trade stable coins. Like it was.
I don't want to talk too much about CRV and the token knowledge and some of the DAO mechanics, but like the actual like you can trade a stable coin. I mean, like I'm not using DEXs just because like I think like centralized exchanges are like tainted somehow. Like I'll use centralized exchanges when they provide me the best value as a user, and I use DEXs when they provide me the best value as a user. And there's like lots of times when using like decentralized stablecoin swap has just fit my needs better than a centralized exchange by a lot, I'd say.
Yeah.
And like I use Ren, really like that. I've also
So you tokenize Bitcoin with Ren.
yeah, like, and I used WBTC through CoinList. That was a pretty CoinList WBTC stuff was great. The Ethereum side was great, and Ren had the same problem because you're waiting on Bitcoin blocks. And it's like, I feel like I'm in 2017, like praying that there's like more than one Bitcoin block in an hour. And like, when am I ready to do the next transaction? It's just like, oh. But that's Bitcoin.
It is nice. It's very nice to not have to interact with that middleman. And I still have a deep appreciation for what centralized exchanges have enabled. I mean, we wouldn't be where we're at if we didn't have these centralized exchanges over the last few years. But yeah, I love using the bridge through Ren. It's so much.
I mean, it's not like I don't use centralized exchanges. Like if there are products that like, there are products where Uniswap's not the best market. Like completely red. Like, I'm looking for best prices, lowest fees.
When gas prices were up at 500 Gwei and 800 Gwei, I mean, I actually realized after the fact I didn't end up using centralized exchanges, but it's because I wasn't making many trades during that. But it had hit me that it's like, I mean, do we need to call this out? Has everyone like forgotten? If it gets this brutal, some of us, if we already have a relationship with a centralized exchange, it makes sense. If I'm not going to pay 120 or $200 to trade, if I do have a relationship there already with a centralized exchange. I think I just forgot about it though myself. I did pay enormous amounts of gas to do some things that I regret. I was like,
yeah, like I think there's sort of like, there are sometimes maybe for people that aren't like as active as DeFi natives, there's a bit of like an insecurity. Like, is there a place for DEXs in the market if like we accept that centralized exchanges are a completely reasonable way to make a trade if you need to make a trade? But I think the reality is that the value prop for DeFi is actually quite good. And like there are currently places in like being a DeFi native where I think trading on centralized exchange has a little bit better value. There are many other places where using a centralized exchange for that is just like dumb. And it's not like dumb because like I'm like, I feel virtuous using a DEX over a centralized exchange. It's just like a better fit for what I'm trying to do. And I think it's like, I think people can like just relax, or like people can just be like feel a lot more comfortable that like these protocols like they'll work, like they'll be useful for users like just competing on their merits. And like I think if they're not useful for users competing on their merits, that's problematic. And we probably should like but I'm not too worried about that. And just like use them because they save money and they're just a more efficient like way to do the thing that you need to do.
Scott, we're gonna have to wrap here pretty soon, but I did want to ask you one last question. You've been very like vocal about DAOs and open org. So what is the value of an open org, or where do you see the value of an open org in 2020?
So there's sort of like one, and I think it's a little bit of a naive view that kind of ends up getting you wrecked a lot, where thinking of like these like figure coins as memes, and then people buy the meme, and then there's a meme, and the meme is worth money. I think sort of like the better view is that like what like creates value, and I think what creates value is like forget social constructions like money or wages or anything. Like what creates value is like humans working together to create something useful. And like I see open orgs as kind of like a different way of getting a group of humans to work on the same thing, right? Like DeFi Pulse, like we have people on our team, we pay them, right? Like Zapper fees the same way, but like Zapper fees creating value like for me as a user, because there's like a lot of people trying to create this like really good web app that solves specific problems for like specific user profiles, right? But like if we forget that like everyone works for Zapper for a second, and we forget that like they're being paid, and we forget that like, you know, Zapper raised funds, right, from people, and let's just pretend everyone was just still working, doing the same things, Zapper would still be creating value. And so like, it's like what sort of incentive structure gets people to work together? And kind of like, I think one of like Ethereum's like biggest visions, maybe the big vision is like, can we find new ways to get people to work together to make useful stuff? And like I think like, I mean, you see Yval, like a pretty useful product in the market, is something that kind of that like didn't really exist before like the Wi-Fi open org was bootstrapped. And like YPool existed, right? And that's kind of what got everyone excited, and sort of the idea that they could create other things. But I think what you're seeing right now, kind of with Wi-Fi community planning like V2 of Y vaults and kind of getting ready for that, is you're seeing people that have sort of been brought together kind of all through their own volition, and are like kind of bootstrapped into like this new type of thing that's building stuff. And kind of if you zoom way out on the Ethereum community, you can kind of see everyone that's building around Ethereum as like a much more diverse and chaotic and messy open org, right? But kind of everyone that's in the space, like, you know, like kind of like you're like, why are you wearing that shirt right now? You know? And it's like to signal that like, hey, I care about Ethereum, and I'm like one of the people that's like making this meta experiment produce useful things. And I think if you take like sort of the super zoomed out view of Ethereum, and you just look at this incredibly like diverse and in many cases composable forest of stuff, right? All centered around like this one core protocol and like this one core asset, like ETH. You can kind of see like, well, where did this come from? You know, like it was bootstrapped in a pre-sale with outside money, and it was bootstrapped with kind of like a centralized team right at the very beginning. But like it's certainly now expanded to like who controls Ethereum. And I think like specifically in ProgPow, kind of at a coming of age where kind of that the more like in open orgs, right, there's sort of like layers of like like how in the middle of the open org you are. And I think the very middle of like the Ethereum open org was very pro ProgPow. But once you got out a little bit, kind of the next rings out were very anti ProgPow. And so we actually saw kind of the grassroots Ethereum community block. And I think that's sort of like a coming of age, something kind of like the Bitcoin had with SegWit 2x, where it's like sort of like the open org is now like chaotic and messy, and who really controls the path? Like the path is like a broader consensus. And
I like that. I hadn't thought about applying the open org to like just Ethereum in general, but yeah, of course it is. Like we're all sort of coordinating and bound to each other at this point. Like, you know, this is definitely a space, Ethereum, DeFi, crypto. You're not going to get very far not making friends with folks and not working together. You know, it's a surefire way to really fail is to make enemies and to try to find.
And like I'm personally hoping that sort of like if you think about sort of like a decentralization meta project with kind of like all of crypto, like I think we've had some really frankly like like toxic participation from like a portion of the Bitcoin community, probably a minority, but a loud minority of the Bitcoin community.
Yeah.
And like, I'm sort of hoping that now that like Ethereum's really shipping these like new ways to like use Bitcoin, and like hopefully if some of these rollups just work, kind of like new like scalable ways to transfer Bitcoin like on Ethereum and in Ethereum layer 2, that we'll see like more of like a less kind of like maybe that sort of like very anti-Ethereum portion of the Bitcoin community. It's kind of like the proof, like in the kind of like the proof that like these are useful synergies between the communities. Maybe that can kind of like create a kind of a new relationship between kind of like the
I mean, I'm open-minded to like, I can forgive and forget, you know, and say if someone is willing to say, hey, I've changed my mind, great. I've done that myself with all sorts of different topics in our space. Like, in fact, I would say I do it pretty often. I hold convictions that are long-term, but you know, I misjudge things all the time. And I find myself saying, oh, now that I have more context, this clearly the narrative has changed and I need to pivot with that. But I do think I have two hypotheses. One, I think there are more Bitcoiners that are secretly using Ethereum and DeFi than they're willing to admit. And two, if they're unwilling to use it today, if they're unwilling to you know, take advantage of those opportunities that are going to be coming over the next 12 months, which are really just an evolution of what we have today. It's stuff that's already working, but it's going to work even better. If they're not willing to use it, they're never going to use it. And I couldn't give a shit if they ever used it. So, you know, they can fuck off for all I care.
Yeah, I mean, yeah, I'm sort of just like, you know, like as complicated as the Ethereum community is, and like different factions,
yeah,
sort of, like, people that have different ideas about what Ethereum is. It's like you have to remember that like the Bitcoin community is like that too, and like there certainly has been success within like the Bitcoin like politics arena of these like self-declared toxic maximalists.
Yeah. It's
like,
a marketing thing. Honestly, Scott, if I had as much Bitcoin as some of them, though, like maybe I wouldn't blame them. I mean, like, dear God, like some of these people, you know, they're wealthy beyond wealthy, and I'm not excusing what I think is some dishonesty and like intentional misinformation, but I don't blame some people for just focusing on the thing that they have the most skin in the game. I guess I'm just saying, like, don't spread misinformation. You know, like there's other blockchains like Solana, Cosmos, Polkadot. I'm trying to think of what else. I'm not very well informed on them. My intent is to not make the same mistakes. I do want to continue to learn, even though like obviously my like all my time, my skin in the game is mostly in the Ethereum community. And I'm very grateful that that narrative actually is playing out very favorably right now. But I'm curious by nature. I think like Andreas Antonopoulos is will always be someone that I'll admire. And I thought that he in the early days he took some really bold steps to think outside the box and explore Ethereum. And you know, again, Ethereum and Bitcoin tend to be the largest land masses in our space, but you know, we all have to like stay on our toes and encourage innovation and continue to learn. And you know, again, not make those mistakes of just burying our head in the sand and not learning.
Yeah, like I think in general, closed-mindedness is like a very expensive trait.
It's a very expensive trait. Yeah.
Yeah. And so I think it's like there's a balance between like trying to be open-minded to innovation while also trying to like be closed-minded to like inauthentic opportunism.
Oh, that's great. I love that. Yeah, like
it's hard. Like it's super hard because like I don't know, like, you know, you just try to do your best and like kind of like filter through because like you don't want to like close the door on like real people trying something new that maybe it seems like it won't work because it's so different, but you know, they probably like have more going on than how they think it'll work in their heads than like maybe they've been able to fully communicate. Or maybe it's just too complicated that you just don't have time to look at it until like you get signals from your social like graph that like this is something important enough to invest serious time on, like to understand fully. And so it's like very much a balance of like, you know, trying to figure it out without like making mistakes. And like I like, you know, there's been teams that like I've like bought in on, then dismissed, now bought in on again. Like, yeah. So like, I don't know.
No, it's very well put. I like what you said. I'm definitely going to cut that and put it into the 2-minute highlights that goes on to Twitter, because it's about being willing to change your mind, but not like lacking the conviction to to believe in something that you've thought long and hard about and done research about. Like, we don't want fair weather fans, and I kind of see that back and forth. Hey, end of the day, I just love letting reality play out and observing it and participating. And, you know, there's a lot in Ethereum that, I mean, God, I like personal tokens I'm not involved with really, but I'm going to have Marguerite de Courcelles from Blockade Games on Thursday. Super excited to learn more about her personal token. Gosh, there's so much going on. Like NFTs, I feel like I've really failed to keep up with NFTs, but I'm trying to have more guests on to learn about it and try to like, you know, catch up and understand that like it's not just always digital art. Like there's so much going on in gaming, and it's a challenge to keep up with it.
Yeah, and like the other thing, it's like you can't judge someone too much by what their like plan today is. Like a lot of times you'll read about a project and like, you know, maybe they're maybe a little bit new to the space and it's like, okay, well, this isn't going to work. But the thing is, they like, they're probably going to learn that. And like, you know, some people will just keep the blinders on and go down with the ship. But more often than not, for like the people, like the most authentic builders, they just keep iterating and like shipping new things. And then like, yeah, the first thing they talked about was basically terrible. But the thing they're working on only 3 or 4 months later is like pretty reasonable. And yeah.
Yeah, no, I like that. It's all about in DeFi. I've really been paying closer attention to the way that his name is Ian Castle. He's the head of this micro cap club. They invest, I think, in companies that are like less than, I don't know, 500 million in terms of their market cap. And it's mostly in the UK and Australia. I think Tom Shaughnessy from Delphi Digital is like in it, but I've really like enjoyed listening and learning from him about, following your investments more closely. He talks about how he babysits his investments. And this goes into kind of what we talked about earlier about if you are holding like a DeFi lending related token, it makes a lot of sense that you should try the lending platform. And in some cases, that token actually has no tie to the value of that lending, or it's supposed to not. It's supposed to be purely a governance token. But there's something about babysitting your positions, being an active market participant. And I really like how he talks about, Ian Castle talks about like being able to change your mind and to recognize the narrative has changed, or to recognize this is clearly overvalued, or to recognize I've just found something that is truly that much better. I'm not a fair weather fan. It's just that I had hypotheses that haven't really played out. But lucky for me, DeFi Dad doesn't do any investing advice.
No, but like I think it's also like it's kind of like an interesting thing that if you're not like taking an active like role in the space and you're not contributing and you're not going to like have nearly as like good information about these projects. But if you are trying to speculate on them, like not being a contributor, you're in a marketplace where you're going to be trading. The market price will be set by a mix of people that don't know very much because they're not actually using the stuff or not contributing to the communities, and people that are deep in, right? And so like, you know, how well do you think you're going to do? against like someone that's like in that Discord talking for 90 minutes a day. And that's the person you're trading against. If they're selling to you, do you want to be buying? Probably not.
Yeah. Makes sense. Scott, anything else that you'd like to leave folks with? I think we've called out the main projects that you work on, which again was DEX.AG. We've got the ethgasstation.info, which is incredibly helpful. I check it before every single transaction. I would bookmark ethgasstation.info and Etherscan gas tracker. I like to hop between the two of them just to see sometimes like you guys you're normally in line, but if there's a difference, it's so helpful just to see that difference. And then DeFi Pulse.
Yeah, I mean, I don't know. We're just trying to do different fun stuff, see what works, see what does it.
Do you have a Discord for? I'm trying to remember which of these. Do you have a Discord?
Yeah, there's kind of Discord for all of them. Is like the concourse Discord, which like if you click on the Discord link on Fgassation or DeFi Pulse or DEX.AG, it'll kind of take you.
It'll take you to that. Okay, cool. So just go to one of those websites. That was I think I got them all here. Actually, there was DEX.AG. You can track recommended gas prices at ethgasstation.info, and then there is a wealth of information on the DeFi Pulse website. If you click on any one of the projects, you can actually get like a very succinct description of what the team works on, links to their website. And then I like the categorizing that you guys do, like, between like DEXs and lending. Honestly, if I were a newbie today, I would spend a lot of time on DeFi Pulse. If you just read that and go through your guys' blog, Jesus, like you'll be more expert than a lot of people in our space.
Yeah, and one thing I'm pretty excited about that we're getting, I think, close to is we've been working with Gauntlet.
No way! What is Gauntlet? Steel cage fighting.
Quantitative finance professionals deploying their genius onto DeFi.
Yeah.
Like it's like a lot of like stress testing, like economic stress testing for DeFi protocols. Sort of like, what are your risks? Like, how could you lose all your money? Like kind of like when the MakerDAO auctions kind of like had a waterfall effect on the price of ETH-DAI back a while ago.
Yep.
That's sort of like one of the things that they analyze for projects. But they're going to have like a economic safety score on a subset of the projects on DeFi Pulse that I think will be kind of pretty cool.
Whoa, is that kind of like? By the way, am I showing the correct website here?
Yes.
So is that kind of like an improvement on like what the DeFi score was? It sounds like I mean,
I don't follow the nitty gritty of DeFi score these days, but I do know that this metric will kind of be focused on the economic safety.
I like that. Almost like talking about like a risk adjusted return, but in the context of DeFi.
Yeah. Like let's say, I think there'll be more details about exactly what goes into it, but like, essentially, like if like a lending protocol might be like teetering close to like a solvency threatening event, that's what I hope would be.
Yeah, that would
be in the number, but I think we're gonna be able to release more details on what it is like as it's going live. But it's something that we're pretty excited about.
Hey, 2 quick questions for you. Someone had asked thoughts on GasNow.org. Do you know anything about that?
I've heard of it, but I don't know. Seems like an interesting project.
Check it out sometime. Yeah. By the way, feel free to Pyramid 2017 throw in there if you have any other thoughts on that. And then there was a question here from Finance Astronaut a while ago. This was about I think this is about the DeFi Pulse Index set. Anything there you can share?
Yeah, I think it's an important thing to have. It probably won't be I would expect that to be something that's handled within the set, rather than something. If you think about sort of S&P 500 as an index, and you think about SPY as kind of like the ETF people buy, the index is more like, here are the top level tokens, whereas like the dividends are actually collected within SPY, the ETF. So I do think it's important to like maximize the returns on those, but that would be something that's sort of handled by kind of by the actual basket.
Yeah, and this is also too, the DeFi Pulse Index is like, isn't it like only a month old? So this is like feedback to get. I think like this sort of stuff, it's the answer normally is like, oh, that's a good idea. We've thought about that, and then it's a matter of like, okay, will we? But like, when can we implement this without, doing too many modifications to the set? Like you guys just launched that set, and you don't want to be tweaking it too often.
Yeah, and then, and the other thing I would say, if you want to be kind of like amongst the first to know what sort of like future plans for how exactly those sets will be managed, I would follow Set Protocol on Twitter and DeFi on Twitter.
Yeah, it's a good one. On the another. Yeah. Well, hey, Scott, thanks so much for your time. Glad we were able to talk a little bit longer. Just appreciate the wealth of information you always have to share. And we should have you back on sometime soon. This is really, really fun.
Yeah, sure. Yeah, no, this is great. Yeah, and if you haven't already, follow owl_finance on Twitter.
Awesome. There we go.
But that's not related to a token called Owl. Don't buy the token called Owl.
Yeah.
A couple of them, not at all related.
Yeah, this is unrelated. Yes. Good.
Just owls.
Sounds good. All right, man. Hey, thanks so much. Bye, everyone. We'll see you next time. We'll see you tomorrow. Actually, what am I saying? Tomorrow at 3 p.m. Eastern, we'll have the Shell Protocol guys on and talk about their new stablecoin liquidity protocol.